Welcome back to Ways to Love Your Money. I'm Elisabeth Dawson. It's so nice to be back in our studios to be able to film. So hopefully all of you are back in your offices if you're able to go back and you're enjoying your work week. So on this week's episode, we want to talk about retirement plans for employers. So if you are a business owner, what kind of retirement plans do you want to set up? I'm going to talk to you about a couple of different ones. So a simple IRA, what is a simple IRA? It's a savings incentive match plan for employees. So it's a traditional IRA setup. It doesn't have as many fees, so that's what's attractive to it. But not only can you contribute to your retirement plan, your employees can do the same, but you need to match them a certain percentage. So you're going to need to do a little research on that one. Now, a lot of CPAs suggest something called a SEP IRA. Now, what's a SEP IRA? A SEP is a simplified employee pension plan. Now, one thing you have to understand is that there is a contribution that you need to provide for employees here, 25% equal to the employee's pay. So if you're setting up a SEP and you have employees and you haven't set up your employees plan, you might need to get that checked out to make sure you're in compliance. Now, 401ks, most employers think that 401ks are the way to go, or if you're a nonprofit, a 403b. So what is the difference here? Now, with the CARES Act, they've pushed out to age 72 for required minimum distributions, but you might be in a situation where, talked to a lady earlier today that's 75, still working, still thriving, still doing great. She's not ready to retire yet. And I mean, gosh, when I get to 75, I want to be just like that. But in this situation, if you're still working for an employer, for a 401k, you might be able to make contributions for a longer period of time. Now, in some of these situations, there might be a match that the employer has to make, but also due to the CARES Act, you have an exemption of taking withdrawals from your required minimum distributions until 72, but if you're still working, that kind of prolongs that as well. So some things to take into consideration. A couple other pieces I wanted to bring in are defined benefit pension plans. This is something where most business owners don't even know that this is available, because if we have a SEP, a simple, or a 401k, we're thinking those are the only options we've got. Well, what's a defined benefit pension plan? A defined benefit pension plan allows employers or the owner of the company to be able to put large amounts of money away for retirement. Maybe they did something called late stage retirement planning. They've just been putting all this money back into the business. Now all of a sudden, gosh, they're seeing retirement 5, maybe 10 years away, and they're saying, gosh, how can I put away enough money to be able to sustain my retirement income? $14,000 to $19,000 to $26,000 in a 401k might not be enough. All these different plans have limits, but you want to consider a lot of different opportunities for you. So as a defined benefit pension plan, something called the cash balance, it's a categorization of all of your employees, and basically everyone gets to participate, but a defined benefit pension plan allows the business owner to put large amounts of money away, 90% or more for themselves. So they get to put large amounts. They still have to include their employees, but again, categorically, it depends on how much. And there's also usually something called a profit sharing plan that's attached to it, or a safe harbor match. So what's a profit sharing plan? A profit sharing plan is something that you get to actually experience with your employees, possibly put a little bit higher amount of money away for you. But again, it's discretionary. So if you're not having a good year one year, maybe you don't put money into the profit sharing plan. But if you're going to put profits away for you for a later date, you're going to be putting profits away for your employees too. These are all big discussion items. I'm sure you have lots of questions. Please send your questions to questions@Elisabeth Dawson.com. I'd love to hear about what your questions are here and what's maybe a good plan for you. Usually for business owners, we're looking for tax mitigation strategies. What can we do today to reduce our taxes? Because every business owner is in the same business for the one profit. It's that profit to create profitability year in, year out, and consistently, right? If we're running our business for profit, we want to make sure we have as much profit to go. But then what comes with profit is what? Taxes. So if taxes are over here on the other side, what are we doing to mitigate those taxes? Any one of these retirement plans can actually help you mitigate taxes, some more than others. So again, what's right for you? I couldn't tell you, but it's time to have that conversation with a financial professional to be able to determine what's good for you. If you want to reach out to us, we'll be able to help talk to you about this at 619-640-2622. Hopefully you'll stay tuned next week. Our podcast will be back with a new topic. Bye-bye. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.